On September 9, 2025, the world was stunned by an event no one saw coming. The usually calm and predictable relationship between Canada and the United States was thrown into chaos overnight. Without warning, Canada abruptly restricted American goods from entering its market, halting the flow of products that had crossed the border daily for decades. This wasn't a subtle policy tweak, it was a seismic shift, ending decades of seamless trade across the world's longest undefended border. The highways and railways that once buzzed with activity now stood eerily silent. For generations, the U.S. and Canada have been economic partners, with supply chains and daily commutes blurring the border. Families lived on one side and worked on the other, and businesses relied on just-in-time deliveries that now seemed impossible. Today, that stability shattered. The announcement left businesses, families, and markets reeling. Small business owners stared at empty shelves, while multinational corporations scrambled to reroute shipments and manage the fallout. There were no public trade wars or dramatic disputes leading up to this, just a sudden, decisive move. Diplomats and officials were caught off guard, left to speculate about the motives behind Canada's decision. Financial markets plunged, and uncertainty swept from Wall Street to small-town shops. Investors panicked, and local economies braced for the unknown as the ripple effects spread far beyond the border. What's most shocking is Canada's boldness. Long the steady partner, now redrawing the rules. The government stood firm, insisting this was a necessary step to protect national interests. This isn't a single tariff, it's a fundamental reset of the relationship. Decades of agreements and trust were suddenly in question, as old alliances seemed to unravel in real time. Canada is signaling it's ready to protect its interests, even if it means disrupting a century-old partnership. The message was clear: national priorities now come first, no matter the cost. The world is watching, and the U.S. must now decide how to respond. Allies and rivals alike are analyzing every move, aware that the outcome could reshape global trade. A new era has begun, and North America holds its breath. The future is uncertain, and the choices made in the coming days will echo for generations. To truly understand this decision and its far-reaching implications, you need to know Mark Carney, the architect behind it, and one of the most influential economic minds of our time. Carney isn't a typical politician. He's a former governor of both the Bank of Canada and the Bank of England, a rare achievement that speaks to his global reputation. He became renowned for his steady hand during the 2008 financial crisis, guiding Canada through turbulent times, and later for his leadership during the uncertainty of Brexit in the UK. His ability to navigate complex economic storms has earned him respect from policymakers and financial experts around the world. With a background at Goldman Sachs, Carney honed his skills in the fast-paced world of global finance. He's built a reputation for data-driven pragmatism, always relying on evidence and careful analysis rather than political rhetoric. Colleagues describe him as calm under pressure, analytical, and unafraid to make tough decisions when the stakes are high. He's not a populist, but a strategist who values long-term stability over short-term politics. Carney's approach is methodical. He weighs risks, considers the broader impact, and always keeps the future in mind. This makes him a trusted advisor to governments and institutions worldwide. His return to Canadian public life signaled big changes ahead, but few expected anything this dramatic. The anticipation around his next move was palpable, as many wondered how his international experience would shape Canada's direction. Carney's focus on climate risk and economic resilience has shaped his vision for Canada's future. He's been a leading voice in connecting financial stability with environmental responsibility, pushing for sustainable finance and policies that protect both the economy and the planet. When he announced this policy, it wasn't bluster, it was a calculated move, rooted in deep analysis and years of experience. Every detail was considered, every consequence weighed, reflecting his commitment to thoughtful leadership. That's why his words carry such weight. This is not a political stunt, but a strategic shift. Carney's reputation is built on credibility and results, not empty promises. Carney is staking his reputation on a new path for Canada, one that could redefine the country's economic and environmental future. It's a bold move, and he knows the risks, but he's never shied away from a challenge. The world is taking notice. As Carney charts this new course, global leaders, investors, and citizens alike are watching closely, knowing that his decisions could set a precedent for countries everywhere. Carney's announcement introduced the Canadian Prosperity Framework, a sweeping plan to secure Canada's economic sovereignty. This isn't about isolation, but about rebalancing a trade relationship Carney says has become dangerously one-sided. The framework rolls out targeted tariffs, import quotas, and Made in Canada requirements, starting with sectors like autos, agriculture, and digital services. U.S. tech giants face new taxes and government contracts will favor Canadian firms. Carney insists these aren't punishments but necessary protections for a mid-sized economy beside a giant. The plan is phased, structured, and designed for long-term resilience, not knee-jerk protectionism. The scale is unprecedented, a two-tiered import system with U.S. goods facing new hurdles. Canada will keep pursuing free trade with Europe and Asia, but the special U.S. relationship is over. A new, more guarded era has begun. Why now? Canada's move is driven by economic anxiety, political calculation, and a push for self-reliance. Many Canadians feel the U.S. market overshadows their own, turning Canada into a branch plant economy. The framework aims to protect Canadian jobs, especially in manufacturing, by making domestic products more competitive. It's a gamble. Higher costs for U.S. imports could mean more jobs at home, but risk American retaliation. Nationalism is rising, and standing up to the U.S. plays well politically. There's also a strategic vision. Carney wants to reduce dependence on the U.S. and diversify trade toward Asia, Europe, and South America. The hope, a more resilient, balanced economy, less vulnerable to U.S. decisions. It's a high-risk, high-reward strategy. Canada is declaring economic independence. The world is watching to see if the gamble pays off. The Prosperity Framework isn't a blanket ban. It's targeted protection for key Canadian industries. Agriculture, especially dairy and poultry, gets reinforced supply management, making it even harder for U.S. products to enter. In manufacturing, especially autos, new incentives and requirements aim to boost Canadian production and jobs. The digital economy faces a new tax on U.S. tech giants and regulations to promote Canadian content. It's about economic and cultural sovereignty, ensuring Canadian voices aren't drowned out. Natural resources from lumber to critical minerals are also in focus. The framework links exports to domestic investment, aiming to keep more value in Canada. For critical minerals, the goal is to build a homegrown processing and manufacturing sector. Each measure is designed to strengthen Canadian control over its economy. The message: Canada will play by its own rules. The U.S. business world is in shock. Companies built on seamless cross-border trade now face tariffs and regulations that threaten their bottom line. American factory workers and farmers are suddenly at risk. Auto parts, dairy, and more could lose access to a vital market. Labor unions warn of job losses, and farm families fear financial ruin as Canadian doors close. The U.S. Chamber of Commerce calls it a betrayal, demanding Washington respond forcefully. Billions in cross-border investment are now in question. Trust between the two economies has been shaken. The pressure is on the U.S. government to retaliate. Businesses are scrambling to adapt, but uncertainty reigns. The integrated North American market is fracturing. The fallout is just beginning. Two industries, cars and dairy, are at the heart of Canada's latest trade moves, and their stories reveal just how high the stakes are for both countries. These sectors are not just economic engines, they're symbols of national pride and livelihoods for millions. The auto sector in particular is a marvel of cross-border cooperation. Every day, thousands of parts and components travel back and forth across the U.S.-Canada border. In fact, a single car part might cross the border several times before it finally becomes part of a finished vehicle rolling off the assembly line. But now, new tariffs and stricter content rules threaten to disrupt this delicate system. These changes could raise production costs, slow down manufacturing, and put thousands of jobs at risk on both sides of the border. For U.S. suppliers, the added delays and mountains of paperwork could mean losing valuable contracts. For Canadian manufacturers, it's a matter of facing higher prices, tighter margins, and some very tough decisions about their future. The dairy industry faces a different challenge. Canada's supply management system has always tightly controlled imports, keeping most U.S. dairy products out and leaving American farmers frustrated and shut out of a nearby market. Now, those barriers are even higher than before. For U.S. dairy cooperatives hoping to expand into Canada, the door is closing even tighter, dashing hopes for new sales and growth. The result? Oversupply in the U.S. will only get worse, forcing family farms to make painful choices as they struggle to sell their milk and keep their businesses afloat. Meanwhile, Canada is doubling down on protecting its own farmers, determined to shield them from foreign competition, even if it means straining the relationship with its biggest trading partner. Both the auto and dairy industries now face a period of uncertainty and upheaval. The ripple effects of these changes will be felt not just in boardrooms and barns, but in communities across the continent. The message from Ottawa is unmistakable. Canada is putting its own interests first, determined to protect its workers and farmers above all else. Now the United States faces a critical decision. How will it respond to this new reality, and what will it mean for the future of North American trade? Canada's move ends an era of predictable, open trade in North America. The principles behind NAFTA and USMCA are now in question. A tit-for-tat trade war looms, with the U.S. likely to target Canadian exports in response. Businesses face costly supply chain upheaval, and consumers will see prices rise. Canada is already looking to deepen ties with Europe, Asia, and South America. Over time, this could shift Canada's economic focus away from the U.S. For America, it's a wake-up call. Even close allies will act to protect their interests. The U.S. must choose, retaliate, or negotiate a new understanding. The rules of North American trade have changed. Strategic competition is the new reality. The future of the U.S.-Canada relationship is now uncertain. The U.S. faces pressure to respond, with threats of retaliatory tariffs and tense diplomacy ahead. Businesses are pausing investments, scrambling for alternatives, and bracing for higher costs. The seamless border is gone, uncertainty is the new normal. Two paths lie ahead: a damaging trade war, or a chance to renegotiate a more balanced partnership. Either way, there's no going back to the old status quo. Canada has chosen a new course, betting on independence and resilience. Mark Carney's framework is a historic gamble. The world is watching as two nations navigate a new, unpredictable border. The next chapter in North American history is being written now.